Hello my friends, and welcome back to another video here on Rebel Trading. In today's video, I'm going to be featuring a 1-minute scalping strategy. The best part about this strategy is that it involves the use of only one indicator. The strategy works good for crypto, Forex, and stocks, but mind that this strategy is a volatility strategy. However, considering it is a 1-minute trading strategy, you need to mind the volume for the asset that you're trading. So if you find that the asset is trending, the strategy might not work as good. Also, be sure to stick around to the very end of today's video because I will be back testing this strategy to show you how profitable and how accurate it is. So we're going to click on indicators and we're going to be using the Heikenach RSI, and it's going to be by J. Rogers. As for the settings, we're going to go down here, click on settings, and we're going to go to inputs. So for the open smoothing, we're going to change this to 11. For the style, we just uncheck the RSI histogram. You can change the colors to your preference, but I'm just going to leave it how it is. If you guys are liking this video so far, I'd greatly appreciate it if you would smash that like button. I always enjoy making content for you guys. Also, our free Telegram trading channel is now out. You will find the link to that channel in the comment section down below. So for the strategy, the very first thing that we're going to be looking for is for whether or not the price action is trending above the 20 level or below the negative 20 level. So this is going to indicate whether or not an asset is overbought or oversold. So if it's in the green, if the bar touches the green, then it is in overbought territory, and vice versa if it touches the red territory. So the next thing we're going to be looking for, and this is very important, is to identify whether or not the asset is trending. So for example, you can see that there was a reversal on the 1-minute time frame in this price action. So we can see that it is bullish. If this is going to occur at this point, you only want to be looking for long signals. However, this strategy works best when there's volatility in the market. So as we can see right here, we have volatility and consolidation in the price action. We don't really see a whole lot of strong trends in price action. So this is an ideal environment that we're going to be looking for the strategy. So right here, we can see that we had a green bar touch into the overbought territory. Once this occurs, we're going to wait until we see a red bar close. As soon as that happens, we can take our first short position. So we're going to take our short right here. The stop loss, we're going to set a few points above the swing high. And I found a risk reward ratio of around 1.5 to work best with this strategy. If you intend to hold onto the position past the 1.5 risk reward ratio, what you could do is wait for the price action or even this yellow line right here to touch into the oversold territory. At that point, I would also encourage you to move your stop loss down to prevent you from losing the trade. Risk management is important in any strategy, and especially so when you use a trading strategy like a scalping strategy. As you can see on the 1-minute time frame, if you have poor risk management, you can very rapidly blow your account. So following this trade, we can see that we did not touch the oversold territory, but the price action did go up and it hit into the overbought territory once again. And then we had a red candle close. So we're going to be taking this short position right here. Again, we're going to set the stop loss a few points above the most recent swing high position. This is going to make sure that you can't get stopped out from your trade. Also, some of the brokers have different types of spread. So you can see on one broker, or at least on TradingView, that the price action is right here. However, if the spread is too high on the asset that you're trading, you can hit your stop loss even though the price action did not actually hit the actual intended price. But as you can see here, I'm pretty sure that we did hit our stop loss on this short position. However, losing in trading is inevitable, so you need to prepare for a loss and you need to minimize the risks associated with that loss as much as possible. Especially with the 1.5 risk reward ratio, you can very quickly make up profits that will far exceed the losses. So immediately after this trade, we can see that we did re-enter into the overbought territory, and we had a red candle close once again. So we're going to wait for this candle to close, and if it's not a doji candle, we can take our short position. So we're going to take a short right here, and once again, we're going to set the stop loss a few points above the most recent swing high, and with the 1.5 risk reward ratio, we have another winning trade. Even though this trading strategy is on the 1-minute time frame, it does require a little bit of patience. You never want to assume the trade or bend any of the rules associated with this strategy. All you have to do is be patient and another trade will arrive. Once again, we can see that we entered the overbought territory, red candle close, and the price action does not appear to be trending. So we're going to take our short position right here. set the stop loss a few points above the swing high position. And although this trade did take a little bit of time to play out, we have another winning trade. All right, I will now be backtesting this strategy using my backtesting software to be able to show the results for the strategy and see if it's truly profitable. Stay tuned and see what we find out. All right, so here we can see the results of this trading strategy with a 68% win rate, and it looks like a 43% P&L. Mind you, this is with a 1.5 risk reward ratio. Of course, this was out of 50 trades. Backtesting was done, I'm gonna say, within a couple of days. I also do backtesting whenever the times that I actually do the trading itself. So you can see that this trading strategy is profitable. One of the most important things to look out for is whether or not the price action is trending. So if you find that it begins to trend, you want to avoid it altogether. Also, I found that the accuracy using this strategy could have improved if you turn the risk reward ratio maybe down to 1.4 or even just a 1 risk reward ratio. Of course, the profit might have been a little bit lower. The accuracy for the trades would have been a lot higher. If you guys enjoyed the content you saw in this video today, I'd really appreciate it if you'd smash that like button. Check out the Telegram channel for your free Forex trades on a weekly basis. Trade smart, trade good, and I'll see you guys in the next video.